Hey guys, welcome to another Trade Genius podcast. Got my good friend Bob Kudla here. Guys, Bob is going to show you a trade that's going to work in a bull market or a bear market. Doesn't matter. We're going to show you how our system works with this particular setup. Let's dive in.
Trade Genius.
All right, Bob, what do you got cooked up for the kids today?
Yeah, while we're waiting for the CPI report tomorrow and Trump coming over, and by the way, we think a short-term bottom's in, and so once this news gets out of the way, we're probably going to be good to the end of the month. So we'll talk about that more tomorrow. But I just wanted to kind of do a little bit of a comment cleaner here and also a little commercial for us because it's just amazing how you can make money regardless if it's bullish or bearish. And I want to throw my chart up if I can, Phil. So one of my favorite trades, and I said my favorite trade since XIV came out. Gosh, 10 years ago. I don't know how long ago that was. It's the go-to trade. It's the short volatility index. And just a quick background on this is that the market likes to short volatility most of the time. And typically you get 2 times a year where you get these episodic explosions in volatility. Once in the spring, once in the fall. There's usually a small one in the summer. And you have then an opportunity for multi-months of pretty easy trading. It's not like, it's not a get-rich-quick scheme, but you can actually probably double your money twice, if not more, each year if you trade down in terms of time interval. And I want to show you here is that since the market and volatility has been playing a game with us, basically since summertime, you have to really step down in time frame. And I have a chart here. It's the 15-minute chart. I know it looks all marked up, but really all you have to really look at is look at the bottom pane. So that's our algorithm graphically presented to you. And where you see the area color, that's what we call our super histogram. And that is basically a weighted average of our 4 indicators, algorithms that we code it, and it basically then are assigned a number. And so based on that, we can go from -4 to +4 on that histogram. And then what we've done too is to give us a more finer look is that we went ahead and created basically a trend line. And what we like to do, typically the way you trade this is that you want to have a -4 on the trend line, and then you want to have a green histogram. However, when you trade the short volatility index, it doesn't matter, okay? It's a quick trade because it always wants to go up. And the reason why SVIX wants to go up and why shorting volatility is the way to go is that if you go to VIX Central, you can look at a futures curve contract, you notice volatility goes up over time. The way they calculate SVIX is they take an average of the front month contracts, and they try to maintain a 30-day duration on that. And that usually drags the index higher unless volatility on the very front end is rising more rapidly than the curve itself. And that's when you get a UVIX trade. I hope you guys are still following me. But the bottom line here is that if you get a -4 trade, the moment it comes off that -4 in the 15-minute, see trade, take trade by SVIX by whatever your normal size is, and you stay in that trade until you get a reversal in the signal, meaning it goes back to flat or it gives you a red signal. And here's, Phil, this is just since the beginning of the year, and the VIX has been rising the whole time. SVIX has been falling, and it's given us 4 trades. And those 4 trades, if you just did 1,000 shares, that's my normal size on these, is that as of an hour ago when I put this chart together, it was a $5,100 gain on approximately $23,000 of investment. And if you annualize that out, that's 22%. If you analyze that out, you're looking at 220% gain. This is in an environment where it's hostile to this trade. When you get an environment where you have 1 or 2, 3 months where the market's generally rising, this thing is just, you buy it and you can sit in this trade probably for 2 or 3 days before you get taken out of the trade again. And I want to show people that, unfortunately for you, if you're just listening, you'd have to use an indicator of your own design. But if you want to join us and take this trade, literally, this is the VIP level indicator. You're looking at $700-800 a year for this. Okay. Even if you did $100, 100 share trade, you almost paid for it already in the first month having it. If this is the only thing you trade it, we're talking to one of our customers this morning. He just wants to trade one thing and trade one thing well. And I said, well, this is your trade. Don't even worry about anything else. This thing's volatile enough, pardon the pun for volatility index, and it likes to go the right direction more often than not. And if you went back farther in time, you're still looking at this trade is probably an 80% winner trade. And you can't ask for anything more than that. The only thing I would caution people on, Phil, is just don't be greedy. I equal weight this all the time, but I've been trading this thing for a long, long, long time. Since 2015 or earlier, I was an XIV addict until I got rid of it, and then I became an SFIX addict. And this is like, you want to pay your bills, you learn to trade SFIX, and you'll be a happy person. I'll throw it back to you, Phil.
I think it's an awesome little trade. Like you said, it's market agnostic in terms of whether it's a bull market or a bear market. It's going to set up every single time. I think the algorithm that this is a culmination of many years of you and I in the lab, basically making this one cohesive now signal. And it's very, very, very consistent. There's multiple ways you can use it too. But like Bob said, get into the room with us. We've got a lot of training material on this that you can understand all the different nuances. It's pretty straightforward, so it's applicable for whether you're a seasoned veteran in the market or just getting started. It's not too complicated at all because, as with everything, the simpler you can make it, the more success you typically will have. So, and it'll prevent you from over trading as well, which is really important when you're taking control of your own finances and trading. You definitely don't want to trade too much. So I don't have much more to add to that, Bob.
No, the only thing I would say is that we like volatility trades because it's a closed loop system, can't go to zero, so it's always going to oscillate in a range. It doesn't care about cash flow. It just cares about sentiment, and that's always changing. So that's why we like trading it. With that, we'll let you guys go. We'll definitely try to have another video again tomorrow. Our schedules are now starting to settle down a little bit, and hopefully we'll talk about what we think is going to happen between now and the end of the month. And I think if we have our way, if you're a Bitcoiner, I think you'll be fairly happy. And if you're a market trader on the bull side, I think you'll be pretty happy too, with the caveat of just have one foot out the door. Talk to you guys later. Bye.
Trade Genius.